this century. I mean, look at this thing. There's just so much green on there. Hello, everybody, and welcome back to another video. I'm Gav Blacksburg, aka Wolf Financial. I'm here with Evan from Stock Market News. We're going to recap the first half of this year for the stock market, why it's one of the most insane years that we've had, on pace for the best year this century, and what you should be paying attention to within it. This right here, as you can see, is a heat map of the S&P 500. What's standing out to you off the bat, Evan?
The S&P 500 is up 15.3% so far this year, and it is the best those couple days. So that's what I'm looking at there with that stat. But you can obviously see what's very, very clear, and it will be more clear in the next chart, the QQQ chart. But focusing in on this one, which is the S&P 500 heat map above, is big tech. Those very large, very green squares. The more green something is, or the more red it is, that means it was doing worse or better. It's the larger magnitude of the move, should I be saying. But it's been a crazy year so far. We have Microsoft and Apple and Google all 40-ish%, Amazon in that category as well. And then obviously Tesla, Meta, and the big dog there, NVIDIA, which has been leading the way. So you can really see those names, and there's a couple ones, Oracle, Adobe, AMD, Intel in there kind of going as well. But outside of big tech, though, it's not a craziest of years. It's not the best start of the year this century. There's a couple other green areas. I'm looking in the bottom left with those Visas and MasterCards and Berkshire and even JP Morgan. And the top right, Walmart and Costco. And there's a couple other areas in there, but it feels like a decent distribution of red names in here, Wolf.
Yeah, absolutely. There's some interesting pieces across the board. A couple ones that specifically I'm focused on is this big drawback in healthcare plans. We are seeing that move to the downside, and it's not good when the whole market is moving to the upside and areas of the market are still moving to the downside. So keep an eye on things like Moderna, Pfizer, and others, even AbbVie, right, for potentially continuing this pullback. The charts really don't look good. In fact, taking a quick look at that Moderna chart, if you do, you'll see it's actually on this bit of support kind of in this 120 area, and that could potentially break down and lead to further downside. And I wouldn't be surprised if some of those other charts look similar to that. So keep an eye on that. Energy is a weird one. It's kind of in that middle ground. It looks red kind of across the board, but it had such an insane year last year that a 10% pullback this year doesn't lead to as much concern for me as it does with healthcare. So I'm keeping an eye on energy. And of course, the banks, which you mentioned for a second there, right? Some of those banks, surprised to see that they're actually still green on the year, still holding up, even with all the turmoil. So it'd be very curious to see how those perform in the second half of the year. I think it's a super interesting one, right? Can tech continue a rally like this? There's a lot of people who do believe that it has another 3-4 months in the tank, especially now that the Fed went ahead and they paused interest rates. You mentioned this briefly, but QQQ is just like a sea of green. You know, the only real red in here is Moderna, JD, Enphase, and Sirius. That's it. I mean, everything else is down less than 10% or is up, 40, 50, 100% just across the board. You mentioned Adobe. Adobe went up 40 to 50% just in the past month. So a lot of this is actually pretty recent with some of these gains. We've seen continuation in Tesla, especially over the last month as well. So this didn't even look like this 2 months ago, right? It was a good year, but it's become suddenly a great year for stocks at this point. And the big question is it going to be able to continue that? We got to look at the valuations. We've got a few more items coming up on this. Do you have any big comments on QQQ?
Yeah, quickly on S&P 500, about 200 of those stocks are red so far this year. So about 40% of the index is red and about 60 was green. But on QQQ, that's about the distribution is more about 20% of the stocks are red compared to 80% in the green. And you can overall see the magnitude of those green moves are pretty large. The worst performers in the index, I'm pretty sure you did hit them pretty well, but Sirius, Enphase, JD, Moderna. We also have Rivian, which is somewhere in here that's down 19.3%. Moderna and Rivian both getting taken out of the index coming very soon, within the next week. But flipping on, the next slide here is the Dow Jones, which has struggled a little bit this year outside of, again, those big tech names. Continuing on, we have another interesting one looking at the best performing S&P 500 stocks, kind of digging into some of the more specific names out. And those top three up there, we have NVIDIA, Facebook, and Tesla. It is crazy to see these mega cap names continuing to lead the market, but shout out to that. We even have Microsoft and Apple on this list Netflix and a few others. GE, I know that was a popular one to trade, and yeah, anything on this list standing out?
Yeah, GE, we talked a lot about that throughout a lot of our spaces, but the big theme that I am watching right here is also travel. So you can see Carnival and Royal Caribbean taking the fourth and fifth spots. You can see Norwegian rounding out kind of the top 10 right there. And then I wouldn't be surprised if we continue to see more travel stocks come in. Travel's only been ramping up. More people are traveling. We're coming into summer months, which are big for travel. So one thing that you're going to notice is not on here are actually the airlines. And so I am keeping a close eye on the airlines to see if there potentially is some upside to capture there. What you actually should look at right now for anyone that hasn't is this theme is affecting airlines. It just hasn't made it to this list yet. Delta Airlines is just skyrocketing. They really haven't put in, I mean, they put a red day in on Friday. It was their first red day in almost 2 weeks. Delta Airlines went up 22% in just the last 3 weeks of trading. Absolutely crazy move. So I'm really keeping an eye on airlines to continue this move throughout the summer. I think that while it's hard to tell when it comes to tech, right? Like Nvidia, are they going to get too stretched? Can they keep up with that movement? Is there the demand increasing? Facebook, Tesla, new products and pieces. Travel is very cyclical and typically tends to do pretty well in those summer months as people are coming in. If you do, look at that chart back on Delta, you'll see that obviously there was kind of some rough times the year past, but then they started kind of coming out of that towards the latter portion of summer, and then obviously everything made its way up in that end of September and that big move up in the stock market. So curious to see if travel can continue something like this. Wouldn't be surprised if like American Airlines, yeah, you could take a look at that. That one looks good right here too. That one also had a big pump again towards the end of the year last year. So curious to see if these can kind of get above those levels. Those are what's definitely standing out to me.
Looking at the year to date by sector, you can see a lot of what we've been talking about, big tech leading the way, and a couple of the other sectors kind of struggling to keep up. Communication sectors is filled with Amazon and a couple others, and consumer cyclical is doing pretty good. And then continuing to move through it, we do have the market caps for the largest stocks in the world. They are now worth a combined in excess of $14 trillion. And you can see Nvidia over 1 trillion, Apple getting very close to 3 trillion. It would hit that price around 190.8. And yeah, so some interesting just stuff to watch here. And then continuing on to the last side, kind of putting into perspective Nvidia's run this year. In the last 8 months, Nvidia has been both valued under $300 billion and over $1 trillion. That is insane. A $700 billion market cap difference. And if you go up back on the last slide, if we had that market cap difference as a stock, it would be the 10th largest stock in the world, which is, I don't know if that's a fair comparison, but I think it does really kind of show the craziest that NVIDIA has been on this year. It's up 295.5% from the recent lows and up about 190% as we've been talking here so far in 2023. And Wolf, anything you want to leave people with?
Yeah, I think it's fascinating the ringer that the stock market has put people through over the last 3 to 4 years. Because if you look around at sentiment, there's no way that you would believe that this is the best start to the stock market this century, right? So many people got thrown around into feeling bearish, bullish. They don't know if they should have been investing. They have money on the side, right? The market was all the way down. They didn't buy in December in those areas. Now they're wondering if they should buy. Is it going to go another 4 months? My opinion, you really want to look for quality companies. I recently even added to Apple. Literally, it took one dip. It had just been running. It took one dip off that Apple Vision Pro announcement, and I bought more Apple. I was like, I like it off the dip. These are quality companies, right? Everything that's on this list is going to be around for a while. They're not going anywhere. And so I do believe that we have some room. But the one thing to be important, my perception and my take on it, is that the safest way you can go about this is DCAing. And I've continuously DCA'd every single month for the last 6 months into the stock market, mostly into broad-based index funds, which pretty much are made up of everything that you're seeing on the screen here. So that's a great way to continue to get exposure. And if the market does have a downturn, you're continuing to keep that average moving. So that's a way that I find to look at it and to have some peace of mind with it overall. That's it for this video. Thank you to everyone that tuned in. We look forward to seeing you in the next one. If you want more great ideas and education around finance, go ahead and hit the subscribe and like buttons.